If you're thinking about selling your business, then you've probably wondered how the COVID environment is impacting the market and how this might affect your business. When I speak to business owners, there are generally three things on their mind. Will the value of my business be impacted? Will this affect the timing of the sale? And will it affect the terms and conditions surrounding the deal? Now, in this video, I'll provide an update on what we see in the mergers and acquisitions space for lower to middle market companies. So if you're thinking of selling your business, then keep some of these issues in mind as you consider your plans. To start, it's important to know that buyers will be looking for resilient businesses, not perfect businesses. It's okay if you've had some COVID-related impacts, as long as you're either coming out the other side or you have a clear pathway to recovery. Seasoned investors will expect businesses to face challenges, but they will be looking at how you're proposing to solve those challenges and ultimately whether the opportunity is worth the risk. So if you have some critical issues in your business and you don't quite have answers yet, then you may need to do some more work before you'll achieve the valuation you want. Now, one of the big misconceptions through this period is that only desperate people will be selling in this environment. Now, while there will be some people who fall into this category, you need to look at the overarching fundamentals of the market. In other words, the best time to sell is when there are more buyers than sellers, which is exactly what happened when COVID hit. Now, this might sound a little counterintuitive, but it's quite logical once you understand what is driving buyer behavior. So let's look at some different buyers out there and why they would want to acquire businesses today. First, consider the private equity space. Many of these firms have a variety of businesses in their portfolios, some of which may have been significantly impacted by COVID. So acquiring other businesses to fill an existing need or overcome some immediate hurdles can be a quick fix to their problems. But even more important will be diversifying their portfolio with businesses that are geared to the future. Professional investors are also looking to diversify their holdings. Share markets and property markets have been trading at all-time highs, interest rates are at all-time lows. Yet these investors need to do something with their capital. So they're looking at purchasing businesses in ever greater numbers. Now, for companies looking to grow their core business, they really only have two levers to pull. They build organically or they buy another business like a competitor or a complementary business. Now, frankly, for any business with access to capital, it's much easier to buy a competitor than to engage in a war of attrition for market share. There are also some additional outliers in the buyer space, such as ex-corporates looking to make their next move. Some may have been caught up in the latest corporate restructure, or they simply want to take control of their future and start to build wealth for themselves instead of others. Either way, there are lots of new entrants in the market, and many of them have significant backing to find and grow new businesses. In short, we're seeing more buyers in the market right now than we have in the past 5 years. So if you know how to present your business properly, you have a clear and robust process in place, and you're ready to engage professional investors, then it's unlikely you will see a better time to sell in the current business cycle. If you'd like to know more, reach out and we can discuss things in a more confidential setting. All the best.